Traders, how are you? Marcello, founder of the Day Trading Academy, co-founder of Speed Up Trader, where you guys can come and apply to trade with our funded accounts rather than your own accounts in the markets. Today we're going to be talking about dividend stocks. Now, this is a topic that I don't generally talk about a lot. Me personally, I've had to adapt my own trading due to the fact that, Day Trading Academy is a not big operation. I have to make sure that everything's on point with all of our traders there, where we teach people how to trade, and also Speed Up Trader, where we've had, just to kind of give you a quick summary, when I first started this endeavor to be able to teach other people how to trade, it was really to have them trade my money rather than trade their own money, because I figured, well, if it's working, let me have somebody else do it, and then they can trade my money, and we can escalate it, and, the ambitious person that I am. And so I've had a situation now where I've had to adapt my own trading, and I do mostly swing trading. I've talked a lot about the mining stocks that I mostly get into now. And now I think with this huge market crash, I want to congratulate all of you for getting through the worst week in the stock market history, because the markets right now are a bit crazy. But there's a few things that I'm looking at right now which I think are incredible opportunities, and I think it's something that I wanted to share with you. So let me know what you think. Now, do want to let you know, this is for educational purposes only. We're not trading advisors. I don't trade people's money. So what I'm going to be talking to you about is what I'm doing for my own accounts. So if you're going to do it or you're looking into it, make sure you do your own research. Make sure it's the right thing for you, because obviously your money in your accounts is your responsibility. So just want to get that out there for educational purposes only. Now, we've had a situation where, the entire economy, for the most part, has literally frozen, right? We can say collapsed. It's literally frozen on behalf of the governments around the world, right? These self-imposed quarantines where people are not supposedly supposed to go out, or if you do, you're supposed to be alone. People in Florida, and half of the country, if I'm not mistaken, I think it was 50 million people, are literally just on lockdown. And the only people that are really moving right now are the trucks, the pharmacies, the restaurants, even though there's some exceptions here and there. And if you have any questions about this, don't forget, you can put hashtag Ask Marcello there in the comments section. If you guys are listening on the podcast, which is available on iTunes or even Spotify, you guys can go to Instagram, which is Marcello Arrambide English, or even YouTube. You can leave your comments there, and I'll be happy to answer all your questions about this. And also, if you guys have other opportunities that you're maybe looking at, I'd be happy to go ahead and look at those as well, for educational purposes only. So right now we've had an absolute collapse of not only oil, but other markets as well. Even gold and silver have gone down. The reason why everything is down, because obviously the economy is frozen. I've heard some other people talk about some other dividend stocks of regular retail companies. I think somebody sent me something about a company called Tapestry, which owns Coach and things like that. And I right now, in the kind of economic situation that we're in, I prefer companies that are, let me put it this way. Right now, there is no commerce, right? And we don't know when this is going to get finished, but I think it's going to be done most likely around May or June. We'll start seeing the recovery, but this can happen again. Who's to say, for example, that the coronavirus can't come back next year? Most people don't know that the Spanish flu, if I'm not mistaken, in 1918, spanned 2 or 3 seasons. So we might have a situation where this is more of a flu-like virus than influenza, where it's able to pass around much easier in the cold. So when things get warmer, in my opinion, things will get better. But what happens if it goes south to Argentina, right? Our summer is their winter, and they could come right back, since the world is so integrated now. So due to that fact, and I got my little notes here. Due to that fact, I don't want to put my money in companies that have to rely on customers to be able to buy goods, especially luxury goods. Now, I do think we're going to have a bit of a snap back, or kind of the economy bouncing back, because everybody's going to get back to work. But that doesn't mean that everything's going to be the same, and I don't think it's going to be the same. So the way that my thought process about this is, you have to be careful where you put your money in right now, because we're in this time where it's completely different, right? So what I really like right now are the big oil companies, because everybody's got to buy oil. Our entire economy moves on oil. The majority of the transport and the cargo in the United States moves on oil, the big trucks. And so one of the great things about these companies is they haven't stopped paying their dividends or slashed their dividends, and something crazy like 50, 60, 70 years, something like that. And other companies, for example, Boeing just decided to slash their not only their guidance but their dividend. Whereas these oil companies, they're making, when oil was at $100 a barrel, they're making $20 billion in profit a quarter every 3 months. So I think that we have to think about security. Obviously, we can think about making money, but one of the most important things that we have to really consider now with our portfolios is preservation of capital and the risk of these kind of situations that can go on going forward. And so due to the situation where we had Saudi Arabia starting a price war with Russia, there's some conspiracy theories out there where they're trying to force the price down on purpose to be able to bankrupt the fracking industry in the United States, which needs probably about $40, $50 oil to be profitable. But Saudi Arabia can be profitable at about $9 oil. And so a lot of these companies, the big oil companies, I'm talking about ExxonMobil, the stock ticker is XOM. Total, which is ExxonMobil, by the way, is a U.S. company. Total, which is the French company, not so big on French companies because they're not very business friendly. BP, British Petroleum, or as their new advertising name is, Beyond Petroleum, because they're focusing on more renewable energies. And then we have Shell, which is from the Netherlands. And so the biggest, when we had the collapse in price of oil, a lot of the prices of these companies went down, but they still have the infrastructure. A lot of these companies now are hiring cargo ships to be able to preserve the oil, or just store it in the meantime while the prices, they think, hopefully will recuperate. But right now, Shell, there's not a problem, but there's something that you should keep in mind if you're going to invest in Shell in terms of the stock ticker and the dividend payments, is that you want to make sure that you get the Class B shares, because the Class B shares are the ones that don't have a retention on the payment. So if you get the Class A shares, you're going to get a retention on the payment and not get the full payment of the dividend. So you're going to look for Shell. It's RDS.B. Right now, they're at about 15.69% dividend. If the price of Shell gets under 20, you're looking at a 17-18% dividend. And that doesn't even include when the price of oil can maybe go up. So if the price of oil goes up, or we have a situation, let's say, where it gets back to $50, $60, $70, $100 a barrel, this isn't going to last forever, right? You can do very well on the actual stock price itself. So in the meantime, you can invest in the stock and get 15 to 18% on your money. And again, educational purposes only. I'm not recommending you guys do anything. I'm not a trading advisor. I don't trade people's money. But just talking a little bit about the things that what I'm doing with my portfolio and what I'm looking to invest in as well. BP, as I mentioned, the ticker symbol for BP is British Petroleum. The dividend right now at its price is $14.82. I'm recording on my cell phone right now, so I can't show you, I can't go and do some research for you, because they lost my luggage on the way back from Europe as I was closing all the borders. But just look at the price from today, 23rd of February. You can kind of ballpark it if it goes up or down. BP right now is at about 14.82%. Total, which is the French company, not as big on French companies because they're kind of anti-capitalism, at about 12.82%, and then XOM, which is ExxonMobil, is at about 10.63%. I think we should follow Warren Buffett's advice, and he always said that be greedy when others are fearful, and be fearful when others are greedy. We literally had a situation where the stock market had the longest run, the bull market run in history. We had the longest expansion of the economy in history. That is greed, right? The market kept going up and higher and higher and higher and higher. And now we have a situation where the market's going down and there's a lot of fear on the streets. People are very afraid. Everybody's literally locked down. And this is, I think, a bit more of a extreme situation due to the fact that a lot of the states and even the governments around the world are literally locking down and destroying their own economies in the name of the coronavirus. Whether it's good or bad, I'll leave that up to you, but that's, that's just what's happening, because you can't just stop an economy and decide to just reopen it and expect kind of everything to go back to normal. I don't think it's going to be like that. But if you do have extra capital, I mean, I think right now this is an opportunity of a generation, because I don't think there are too many times that oil is going to get down like this. I also think that if the prices of oil continue to go down, obviously the stock of these companies is going to continue to go down. The percentage of the dividend is going to go up. And in a worst case scenario, right, Shell, which was at about 16% or so, let's assume that they have their dividend. You're still looking at 8%, which is beyond. I just did a video on the difference between investing in real estate and investing in the stock market. And if I'm not mistaken, if you guys are some real estate guys out there, leave me in the comments here if I'm mistaken, but 7, 8, 10% is a great return on real estate, which you're not going to be getting right now due to the fact that everything's shut down. People are losing their jobs and they're not going to be making their rent, right? At least for a month or two. So when we think about the worst case scenario, the world isn't going to stop buying oil. Most people don't realize that even yoga mats, we have this woke generation, but anybody that does yoga, there's oil derivatives in yoga mats. And so you can look at all these you can look at all these stocks. I'll try to put the charts maybe somewhere in here. Tell my team to go ahead and put those stocks there for you to see the charts. But a lot of these companies have gone down quite a bit. I mean, we're talking about a huge crash. And whenever we have, I've been in this industry for a long time, right? If you guys watch my videos over time, I called the crash before Bitcoin. I called the dip in the S&P 500, other things as well, even though I'm doing more videos in Spanish rather than English. But whenever there's blood on the streets, that's when you look for opportunities. And just to kind of point out something, I'm waiting to pull the trigger because I think it's still going to come down a little bit more. I want that 20% dividend. But whenever you have a direct line, right? Whenever you have a direct line, we call this a snap, crackle, pop in the academy that we teach at Day Trading Academy. But whenever you have a direct line where the market just literally goes down, you generally have a little bit of pop up, which is what we're getting now, and then a continuation. Because generally, the market doesn't just stop on a dime and then reverse. So I'm looking for what's called a dead cat bounce, where it's the continuation of the momentum, even though we do have some good news now with the governments, the federal governments talking about the new TARP or the bailout. There's bickering between the Democrats and the United States Republicans, but I don't think this is going to be good for us long term. But no matter how bad things get, even in 2009 when we almost had a collapse of the entire industry, even now, none of these oil companies are talking about slashing their dividends. They're slashing R&D, they're slashing costs, but they're not slashing the dividends. And I think that will most likely continue. And that's what I see the difference is between the oil companies and other companies that actually pay dividends. Because if you're relying on customers to go out and buy stuff, I don't think that's going to continue. And I do think that we're on track to actually hit a recession. I may not necessarily hit it right now. For those of you guys that don't know, we need to have 2 quarters of economic contraction. So, the situation we have now, for example, January, February, March would be a quarter. I think we'll probably have 0.1 or 0.2% growth, very, very small growth. The next quarter, which is April, May, June, the next 3 months, which is a quarter, will most likely have a huge contraction, and then hopefully we'll have the recuperation already in June, July, and August, where people go back to work, we start driving again. Obviously, the demand for oil will go back up because people are in their cars and industry and airlines and everything. So that's I really see this as a huge opportunity. And I just wanted to share it with you because I know I generally only talk about trading. Some of you guys have asked me about being able to talk about just investing in general. And I'll try to make do with my cell phone here in the meantime while my camera arrives to be able to go ahead and make the videos a little bit better for you. So let me know if you guys have any questions. Let me know your comments. If you guys have other stocks, I encourage you to look at these. Remember, educational purposes only. Definitely not a recommendation to be able to go ahead and go out and buy anything because we're not trading advisors. We don't trade people's money. But just take a look. This is what I'm doing in my own accounts. I'd love to hear your comments here on Instagram or YouTube. And don't forget to subscribe here to the channel, and we'll see you next time.